Now, the final step of our four-part audit process is to ensure. What do I mean by this? Well, basically, pretty straightforwardly, self-review. So you've obtained, you've reviewed, and you've reconciled. Let's now make sure that the first three steps that we took there was correct, okay? All our information must be accurate. We must have everything completed, and we must be satisfied that what we pass over to the auditors is 100% bulletproof, foolproof. This is correct financial information. And I'll touch on the importance of that later on. And restrictions. So it's important to note here, and one fundamental thing, and I'll touch on this a little bit more in a later slide. If you receive a grant or a donation or a pledge which has a restriction on it, we must make sure these are appropriately recorded as having said restrictions, as with donor restrictions. We must record that in your accounting software. And again, I'll touch on that a little bit later on. Compliance. Let's ensure that we are in compliance with our various grants and agreements. Maybe you have a grant from federal government. There's a lot of grant reporting and a lot of compliance matters there. Even just receiving money from a philanthropic trust, for example, if they donate to you and they ask for progress reports, let's make sure that we're giving them what they requested. Okay, we must make sure that we're in compliance with every single grant agreement and various other situations throughout the year. And again, restrictions. We must make sure that they are recorded as with restrictions, which I'll touch on now. So many nonprofits struggle with the concept of and accounting for donor restrictions. So I'm hopefully going to give you a bit more insight here if this is something which I think you could benefit from. So what are they? So any gift, contribution, grant, etc., that you receive which specifies a specific way or time in which these funds must be spent. Okay, so the income must be recorded as such in the statement of activities as having restrictions before being released from restriction once we've satisfied those restrictions. This is essential to compliance. So I'm going to break it down into a basic example, which hopefully gives you some insight. Okay, let's say you got a check for $50,000 and it says, and your organization is building a new school, and you're still fundraising for other donations to build up a pool of funds, but this check comes through the door and it says, you must spend this, here's $50,000, you must spend this on building the new school. Okay, we have to record that as having a restriction, because clearly this isn't $50,000 for us to use as we like. The donor has said to us, you must use it to build the new school. It's therefore imperative that we track this accordingly. We have methods in place where we're tracking spending on the new school, and that we can clearly allocate this $50,000 towards that spending. And then once we spend that $50,000 on the new school, we can then release it from restriction.